All right, hey, what's up, guys? Today I'm going to show y'all a trade or two that I took, some stocks that are lining up to be potential trades and investments. Also, I'm going to talk a little bit about the jobs data that was reported today, and then next week, what is expected with the interest rate cuts and bond rates and all that stuff. So let's get into it. All right, so first things first, we're gonna start off with the jobs report. It was not great. It was the worst it's been in 4 years, but people were saying it's from the hurricane and the Boeing strike. The numbers from August have been revised. The Fed revised them. Layoffs continue to trend up, and then they say the economy is strong, but layoffs continue to trend up. People are quitting less, and with all that being said, they're still deciding to cut rates. And they say we're going into a soft landing. That's up for you to decide, but normally when you cut rates, it's because the economy can't keep up. But I think this administration is trying to finish on "quote unquote" a strong note. But that is up for you to decide. So first things first, we're going to start with a play I just bought. So this is Pfizer. Everyone knows it. All right, we're going to go to the weekly candles. So it's been in this upward channel for, 8 months or so. It's been in this upper channel. Upper channels normally tend to break down. I was just waiting on confirmation. So this right here is going to give me the confirmation. Yeah, the peak, the wick out of the top, come down, wick off the middle, and then now we finally fully broke it. We've had a wick off, and then we're going to continue this red candle all the way down for a weekly candle. This gives me the strength to hop in. I wish the RSI was lower, so this isn't the perfect setup, but I might be a little ahead of myself. But I'll show y'all exactly what I bought on it. I bought the January 17th, 2750 puts. I bought 3 of them. I was supposed to buy 2. One more actually went through, but it's all good. So that is the first trade. All right, so trade number 2 is going to be Dollar Tree. I bought shares on this just because the option premium was just a little bit too expensive for me. So this is a pattern you'll see a lot after gap downs. You have this little bounce over like that, and then it'll shoot back up. This is what I was looking for. We have this reversal right here off of this little gap down low. This is weekly time frame. I want to say you see it in companies like we saw it in Starbucks. Yeah, so Starbucks kind of did the same thing. Then it shoots up. So that's what I'm hoping for on Dollar Tree. But this is strictly a technical trade. This is nothing to do with earnings or anything like that. But I do think Dollar Tree is a little bit oversold, along with Dollar General. That's up to you. But so that sums up trade number 2. All right, and then to bring it back to Starbucks, this is something just to keep an eye on. We are on historic resistance right now. Depending on where you draw the line, obviously it's up to you to draw, but this is how I'm drawing it. And in my opinion, we are on historical resistance. Also, our RSI has gained a little bit, and we're still up here, but I don't think we have the strength to break this quite yet. So next week, depending on what happens, we might see like a flush and a red close. And then if we close next week at like 95 or so, maybe we see a chop down to 90. I would think about shorting there, but I haven't taken a trade on this one. But it is something it's just on your radar. So just keep it on your radar. And then, so like I said, this is the Dollar Tree little pop and bounce. But yeah, so that is Starbucks. All right, and this is another trade that I have not taken, but it is on my radar. This is Nike. Nike also is another one of those companies that had the gap down, filled the gap. Now we're coming back down. We might test this 71, 72 level, but based on this weekly candle, we could see a resistance. I haven't taken this trade, but it just because the RSI is dying with it, and then you see the yellow line going over the purple, which basically means it's turning bearish. So this could be a reversal signal to 90. I don't see it as that yet. We will see what happens, but as you can see with the earnings, their EPS beat like crazy, but revenue was just in line. Then I'm pretty sure they guided down on EPS. So EPS was 0.7, and then they're suggesting 0.65 for next quarter. So they guided down, but they are in kind of a rebranding position. So we'll see how this one is, but just keep Nike on your radar, as it could easily go to 89, or next week we could see a $71 Nike. All right, another one to keep your eye on right here is PayPal. It's funny, look how accurate these lines have been drawn. You know, some people are not line believers, but I'm a believer in the technicals to an extent, of course. But it's shot up, retest, shot up, retest. So if you were interested in taking a position, it would not be a bad one considering the RSI has been moving up and up and up. These pullbacks can be healthy, so maybe we see a light pullback. But the main reason is they were pretty much their earnings didn't shock the market as good as they hoped. So basically they were just kind of average earnings. So let's see what they did. So they reported 1.2 and they forecasted 1.12, revenue 7.8-ish, and then they forecasted 8.3. So that's good. So their revenue might go up. But yeah, so this is another kind of a technical trade to keep an eye on. Let's see how it's acting on the daily time frame. Yeah, so on the daily time frame, it is lower than our previous low. So do be wary of that, you know, but we'll see. Keep an eye on it. And then for the final trade, it is going to be TLT. I've talked about it a lot. Next week we have the rate cut. This weekly candle did not end how I wanted it, so I never entered the trade. But, you know, we could see maybe an $86 TLT. But if it goes down there and we get the rate cut over the next, you know, month or so, I don't know how. I would be a heavy buyer here, but I'm looking for a reversal candle somewhere in the next 2 weeks. You know, we'll see with election. The bonds are kind of a political thing, so we'll see with how election goes. But if there's anything you should keep your eye on, it is this right here. The bonds play a huge part in just global equities in general. But yeah, so that sums up all the plays. Hopefully no one sold everything when it was red instead of, you know, taking a second just to take a breath. But yeah, so that sums up the week. So to show y'all, I did get the Pfizer puts. I'm still in the Zoom calls. I did put my stop loss at $500. So no matter what, I will make a little bit over $200 on the trade. That's cool. This Riot call, leaving those, not even touching them. They're mulatto trade. And then I did buy some Dollar General shares Dollar Tree shares as some swings. I think I bought 10 of them. My goal for, here we go. I'll kind of map out. I'd be selling out there. And then maybe we get back up to this gap level. I'd do it right there. So this is my goal for the Dollar Tree trade. You have the gap down on earnings, a little bounce retest. We have a rejection candle on the weekly time frame. And then hopefully we can see it pop up maybe to 90. That's a huge jump, but hey, we'll see how it goes. But yeah, so I hope y'all have a great day and thanks for watching.